Let's get in our technical experts then and start off by talking a little bit about the overall market setup, Mandar. What do you advise us now? We're only 25 points short of breaching 8,700.
Yeah, good afternoon, Anand. I think we are trading on supports. Nifty has a support at around 8,700, 8,690. The view remains intact that this week also would be a week of consolidation. So I'm not surprised to see a down day today. Tomorrow or day after could also be an up day. So the most important thing is that the index is going to stay range bound between 8,000 and 8,700 and 8,900 throughout the week is the view. If 8690 is broken, then yes, possibly the Nifty could head lower. It could fall down to 8550 as well. But as of now, 8690 and is the support which I'll be watching. The reason as to why I say this is if you look at the overall volume in the markets, the volume is low, so it's not the market is not selling on high volumes. Yes, there is profit booking witnessed in stocks which have rallied, and it's but natural that the stocks which have rallied by more than 20 and 30% in the last 2 months, they're witnessing profit booking. But yes, you also have outperformers in this falling market as well. So therefore, the view remains intact. The view is that the market will continue to consolidate. 8690 is the support which I'm watching immediately.
Ruchit, hi, afternoon. Give us a strategy for the Nifty Bank, considering that really is pressurizing the markets today.
Yeah, hi, good afternoon. Well, overall, both the indices, Nifty as well as Bank Nifty, had somewhat formed a lower top kind of pattern on the daily charts. When we see last week on Thursday when the markets opened gap up, post gap up opening, there was no follow up buying momentum on Thursday as well as Friday. And today's gap down opening clearly indicates that this is a corrective, ongoing corrective leg is still there. So we are expecting further lower levels on the Nifty as well as in the Bank Nifty. In the Nifty, we are expecting the targets around 8610, 8620 in next 2 to 3 trading sessions. And whereas the heavyweights amongst the Bank Nifty stocks were the initial amongst the sectoral heavyweights to show some side of weakness. Take it Axis Bank, take it ICICI Bank, and even SBI. These some of the heavyweights amongst the Bank Nifty are indicating that further weakness could be there. And on the Bank Nifty lower side, the index could test 19,250. So probably for next 2 to 3 trading sessions, I think the pressure still would remain on the markets as a whole.
Okay, Ruchit, tell us your picks and your high risk and low risk ideas.
Yeah, so one of the picks that we are recommending at current level is to go long in Mirza International. Well, this is one of the mid-cap stocks which has seen a consolidation phase in last 4 to 5 weeks, and after consolidation it had formed a falling wedge pattern on the weekly charts, which is a trend reversal pattern, and that too the support levels were coming in around its long-term trend line support. So we are expecting that an uptrend in the stock could be resumed. So but this has to be taken from at least 2 to 3 months of perspective. On the higher side, the stock has potential to test 113 levels, so one can go longs in Mirza International at current levels for target of 113 and stop loss placed below 83. Well, on the short side, we are expecting some sort of negativity in telecom stocks. Tata Communication is one of those stocks which has recently shown a good up move. But however, at the end of an up move day before yesterday's session, the stock had formed a shooting star pattern on the daily charts. Then formation of this reversal pattern after a significant rally indicates some sort of reversal, probability of some sort of reversals on the chart. So Tata Communication, one can go short at current levels, keeping a stop loss above the recent of 545, and we are expecting target around 487 next 4 to 5 trading sessions.
Okay, Mandar, to you then, your 2 stocks, LIC Housing Finance and Make Money. Tell us what is it that you propose viewers do here?
Yeah, Aisha, good afternoon. First stock is LIC Housing Finance. This stock is trading with weakness on the intraday charts. Went through a sideways consolidation, and then at around 130 the stock has given us a downward breakout. So this resistance now is at 566. Until the time it trades below 566, the weakness will continue to be there. Therefore, a sell in this stock with a stop loss at 569 for a target of 554. And the second stock that I have is an odd one today. the market is falling and this stock is trading 10% up. This is Make Money Organics. The stock is trading with good volumes right now. It's going through a consolidation, trades at around 46. Looks good to buy because the stock is moving up, and in the last 1 hour of trade I expect short covering to come in this stock. So therefore a buy with a stop loss at 45 for a target of 48 in the intraday trade today.
Okay, there you have it. Those are your top technical recommendations. What about the movers and shakers in trade? Mubina is here from our research team to flag them off. Mubina, what's the first stock on the radar?
Well, it's Vardhman Textiles. This one has continued the up move we saw on Friday's session after the company announced a buyback of 720 crore rupees at a maximum price of 1,175 rupees. Now, if you look at it from the last closing price, that's of course Friday's closing price, this price of 1,175 rupees indicated 12% higher than that, than the last market price. So that is something that of course did cause a buying frenzy in this stock, and as is seen in today's trade as well, it's higher by 4%, though of course it has cooled off a tad bit from the day's high, but nevertheless remember that the company has a net cash of 277 crore rupees, and this versus of course a buyback figure of 720 crore rupees, but nevertheless the stock is buzzing in trade this morning.
Oh yeah, indeed. Vardhman Textile holding out very well. Mandar, would you have a strategy on Vardhman Textile if you track the stock closely?
I said this stock for the last 6-7 months has been trading with a nice uptrend. So if I plot a trend line joining all the lows right from Jain, the stock recently has taken a support. It has got this support at around 950, and from which the stock has bounced. So therefore I think short term the stock could head up to 1100, 1120 levels. That's a resistance for the stock. But the stock surely looks good on the short term as well as long term charts. One can continue to hold on with a stop loss at around 930-35. Higher targets of 1300 to 1350 are expected in the stock in the coming 3 to 6 months.
Okay, that's Vardhman Textiles for you. Moving right on then, Mubina, let's talk about IFCI.
Okay, so IFCI, has come under significant pressure, and this is after the Supreme Court said that it's going to be the SFIO, that's the Serious Fraud Investigation Office, the RBI as well as the SEBI are going to collectively probe into all of the allegations made against the company. Remember that in the recent past there have been a lot of financial irregularities that have really come into light. It is also going to probe into some contentious investments, one of them being a 17.4% stake purchase in Metis Infra, and that too from the Rajus of Satyam. There's also a sanction of 225 crore rupees to the willful defaulter Blue Coast Hotels. So this is something that's of course this is something that's causing the stock to trade under pressure this morning. And there's also Marksans Pharma, positive news coming in there after the company has received the US FDA nod for the loratadine liquid capsules and also the nod for the metformin hydrochloride in May. And in fact, most of the analysts are indicating that the US FDA approval is likely for its Goa plant, which are of course catering to the US markets and the US. And of course, there are still concerns over the UK MHRA GMP, but remember that the US and UK collectively contribute about 80% of the company's top line.
Oh yeah, indeed. Marksans has been the other big buzzer in trade today. Ruchit, did you get a chance to look at how the charts for Marksans are panning out?
Yes, definitely in today's session we have seen the stock moving higher with good volumes, but overall if we positionally observe the weekly charts, then last 5-6 months the stock has been consolidating in a sideways range itself. As of now, there are no definite signs that the uptrend would get resumed after this corrective move from 115 to 45-50 levels. I think this would just be a pullback move. Next 1 or 2 trading session, it would head higher towards 55 or 56. But whether the buying continues from those levels, it needs to be seen. So one need not be in a hurry to buy in the stock at current levels. Let there some sort of a higher top, higher bottom formation coming in the stock. I think then only it would be wise to enter into the positions in Marksans Pharma.
Okay, let's address some queries then, and we've got a first query. It's an email, and Ashish Narayan has written in. He says, do you recommend buying Syntex at the current levels? Ruchit, what would you recommend to him?
Syntex won't be recommended to buy at current levels. If we positionally observe the charts of Syntex, the line chart, there is a closing chart indicates that from November 2014 to January 2016, that is about 15 months of period, the stock had consolidated with support around 88-87 level. So 88-87, which was the support till January 2016, got breached, and then we saw some sort of good sort of selling in coming into the stocks. Now after this recent pullback rally, again that support which was there around 87-88, the stock has now come to those levels. So as per the role reversal technique of technical analysis, the earlier support is always acts as a resistance when markets again or the stock again comes at those levels. So 87-88 is a resistance for the stock. I think the stock would show some sort of corrective move again from current levels, at least up to 78 or 79 levels. So before buying in, I think he should still wait for correction up to 78, 79. I think there again the risk reward ratio could be favorable to enter into the long positions.
Okay, another query then, and this time around from Bangalore. The gentleman has bought about 1,000 shares of Care in India. 197 rupees has been his acquisition cost. He wants to know what he should do with his holding. He doesn't quite have a time horizon in mind. So Mandar, what would you recommend to him? 194.90 is where the stock is right now.
Aisha, for the last 2 months, the stock is trading range bound between 180 and 213. The stock needs to generate a breakout either above or below this range for us to arrive at a decision, is what I feel. With this current consolidation, the stock has created a major support for itself at around 180 levels. Now, till the time it holds on to this support, I think he should hold on. A breakout beyond 213 can take the stock up to 250, 260 levels. So for now, hold on with the stop loss at 177.
Okay, that's the cue coming in from Mandar. Hold on with a stop loss at 177 on Care in India. Parag Milk, that's a recent listing. Let's get in the email query going. And this has been sent in to us by Shashikant. Now, he's got Parag Milk shares. He's bought it at a level of about 343 and wants to know, should he stay put or should he exit? Mandar, give us your technical analysis. What do you advise?
Avan, the stock from first week of July, the stock is range bound between 300 and 350. If the stock breaks below the lower end of this range, it can correct down to 250. So in the intraday trade today, it has broken below this range, so it's trading below 300. Currently, the stock, so basically if the stock closes below 300, I think I had a stop loss of 295 in mind for this particular stock. So what he needs to watch is, he needs to watch this level of 300. If the stock closes below 300 today, then he can exit the stock, because below 300 the chances of the stock moving down to 250, 260 levels are high. Therefore he can exit below 300 and try buying it back at those lower levels.
Okay, Mandar, Ruchit, thanks much for taking your time out and speaking with us today. Still continue to rumble under pressure. We're still down in trade. 87.30 is where we are struggling at. Almost a triple-digit cut coming in for the index and broader markets too in pain. Quick break. When we come back, some more stock ideas.